Hi, everybody. It's great to meet you. My name's Lior, and I am the co-MD at Rimon Advisory. Just a big shout out to Duco and Isabel for organizing this digital conference on such short notice. Really, it was so important for them that you guys got all this information, and with everything going on in the world, that put this together amazingly fast. So thank you and well done. I'm going to be sharing a presentation with you. One moment while I share the screen. Here it comes. Here we go. So as I said, Rimon Advisory, that's who we are. We are experts in probably Australia's two biggest government grants, the R&D tax incentive and the export market development grant. We're going to be talking about those two things today. I mean, this presentation was made a while ago, but I think this next slide is so pertinent. You are all entrepreneurs. And what entrepreneurs do is they innovate and they don't give up, and they have courage, the courage that is required to succeed and belief that is required to succeed. There is a very old Jewish saying that says water finds its easiest path to its destination. So today we have a lot of new obstacles in front of us, but you're entrepreneurs, be like water, get around the obstacles, reach your destination, and don't give up. I'm just going to skip a bunch of this presentation, which really is not required. I'm going to get straight into the material that we are here to talk about today, which is government grants. Skip that one too. Basically, there is kind of a life stage of a startup cycle, and you will be very aware of what it is, but you begin, you hustle, it's hard in the beginning, it's always hard. You start to innovate, and you need cash all along the way. And that's what we're here to discuss today, the avenue of cash called government incentives and government funding. The number one, in my opinion, the R&D tax incentive. The R&D tax incentive provides a benefit currently of 43.5% on your R&D spend. The benefit comes in one of two ways. The first way is actual cash, and the second way is in a tax saving. Basically, what the government is saying is you have losses when you start a business. You will only use those losses one day in the future when you've got profits to knock your losses off those profits, to not pay tax. Well, we are going to give you those losses back in cash today. Not only are we going to give you them back in cash today, but we're going to give you much more. So the tax rate in Australia is 27.5% probably for most of you where your businesses are at. And if you're a very, very big business, it's higher. But they're giving you a rate of 43.5%. That means on $100,000 where you would have gotten a loss of $27,500, you're now getting cash back of $43,500. A company needs to be doing R&D according to the definition of R&D. There are two governing bodies. The one is Oz Industry, and the other one is the ATO, the Australian Tax Office. Oz Industry governs the definition of R&D. You see those three pieces up top here: new knowledge, experimentation, and uncertainty. We'll quickly go through those. New knowledge is you have found a gap in the market. Then you want to make something to kind of win that gap in the market. Then you start building something. Okay, that is called experimentation, which is a process of trial and error. You should all know what trial and error is. Making software and technology, complicated software and technology, you are going to have setbacks. You're going to have trial and error. And hopefully you come out the other end. The final piece, uncertainty. Because what you're doing has probably not quite been done before in the world, you don't know how it's going to turn out. That piece is uncertainty. You need these three pieces in the software that you're building to meet the definition of R&D according to Oz Industry. Now, if you are a business below $20 million, your rate of benefit is 43.5%. Above $20 million, your rate is 38.5%. Yeah, so just quickly, the process that we go through. First, you need to understand if you're eligible. If you are, then you put a registration together that goes to the first governing body called Oz Industry. That comes back. A whole lot of detailed work needs to go into the figures, which essentially needs to take your R&D and attribute a value to it. Those figures get put into your tax return. It gets submitted to the Australian Tax Office, and a while later you get your funding back. That is quite high level how the R&D tax incentive operates. The calculation essentially works like this. Let's look at this. On the left, we have a company that did not know about the R&D tax incentive. On the right, the same company, they found out about the R&D tax incentive, $1 million in revenue, deductions. On the left, we have $800,000. On the right, we've got $300,000 because $500,000 of the $800,000 was R&D expenditure. So we've removed it for the moment. That's how the calculation works. On the left, you have got a profit of $200,000. On the right, $700,000. Obviously, on the right, you are paying much more tax than on the left. So really, at the moment, it's more beneficial to be on the left because you really did spend $800,000. You just haven't included $500,000, and you're paying a whole bunch more tax. However, what we do is we take your R&D amount of $500,000 and we multiply it by the R&D rate of 43.5%, which is $217,500, and we deduct that off what was your profit of $199,500. You are then left with a rebate, a cash rebate of $18,000. Your total benefit is actually $75,000. Why? Because you would have had to pay $57,000 in tax. Now you're paying $0 in tax and you're getting back $18,000. A much more simple example is if you just have pure losses and you don't turn into a profit. So if you're a startup that's been making losses for many years and you've got, let's say, $1 million of losses and you've got that $500,000 of R&D expenditure, you will get back a full $217,500, right? This $217,500 here, the 500K multiplied by 43.5%. If you had the losses to utilize that whole amount, you would get that whole amount back in cash. What it does is it's eating up your losses. You won't have losses in the future. And that's how this calculation would work for you. Indicative expenses, kind of what to look out for while you're doing these things. Before I get into that, you need to be an Australian entity. You need to be submitting an Australian tax return. Your R&D needs to be done in Australia. It cannot be done overseas. So if you're looking to open up an R&D a division in Australia, a company, you may want to consider having a dev team in Australia. Australians are very talented. There are good tech developers in Australia. Obviously, resources are short, just like the whole world. However, if you are considering doing this, well, you could consider setting up an R&D center in Australia, even if you've raised capital overseas, if you've got the funding. And often when startups raise capital, one of the big areas where you're putting that capital is to increase dev capability. So you might want to consider building your development team in Australia. Okay, so if you've got patent fees, obviously Australian, these are all Australian expenses. Engineering staff, as I said, developers or any type of engineering staff could attract R&D, might attract R&D. Industrial design, testing of standards, software development, as we've discussed. Independent testing consultants. So if it's not in-house, but you're getting Australian consultants, that's also good. Laboratory costs, prototype development. A point to note on the R&D tax incentive is you have core and supporting activities. Core activities are activities that are on the direct build of what you're doing. Supporting activities is what you need around it. So if your staff need a place to work and that there's rent on that place to work, well, part of that rent may be claimable depending if your staff are working there or not, but that is a supporting activity. That overhead is a supporting activity. Next, excuse me. I hope that's not Corona. I'm sure it's not. Also a wonderful government grant in Australia, the Export Market Development Grant. This is for Australian entities. You don't have to be a company, but an entity with an Australian product that are looking to export their product overseas and capture foreign market share. You could get back up to 50% of your foreign marketing spend. I will get into those categories shortly. You can make up to $150,000 a year for 8 years. $1.2 million all in all if you're getting a maximum claim every single year. Very attractive. I've certainly seen our clients have stories where it's just transformed them. This money's coming. They've got extra 100,000, 120,000, and they've just captured foreign markets with that and captured opportunities. It is magic money. Sorry, I'll go back for one moment. Three principles of this grant. First one I've already spoken about, Australian product or service. I won't get into too much detail there. If you are setting up in Australia and you want to find this out, you probably need to talk to us. The second, revenue cycle. So this is very important. If you're going to be using this grant, The overseas sales, the revenue of that has to come back to your Australian entity. It cannot remain in a foreign entity. I'm not going to get into detailed accounting, but the profit and loss statement in Australia is what needs to have the revenue. The same for expenses. The Australian entity needs to be incurring those expenses from an accounting point of view. The Australian entity also needs to pay for those expenses. Now, either it can give either it can just pay directly, or if you have a foreign entity, it can give a loan to that foreign entity. Again, I'm just not going to get into heavy details on this. If you've got foreign entities, I'll just let you know it needs to be structured right, and you need some advice on that to get this right. Otherwise, you probably will not be able to get the grant. But those are the three main principles. Product or service, Australian. Revenue needs to come to Australia. Expenses are born in Australia. Okay, what are the categories? There are many categories that are very attractive categories. The first one, overseas reps. Basically, if you've got people selling for you overseas, their salaries might be claimable under this government grant. Marketing consultants anywhere around the world, including Australia. If you've got consultants doing marketing for you and they are directed to target foreign markets, that would fall into this government grant. So Google, SEO, PR, whatever marketing consultant you can think of would fall in here. Overseas trips. So if you're based in Australia and you're taking flights overseas for business development, marketing, lead generation, those flights would be included in the grant. You would get a 350-day allowance per day per person to cover hotels and your food. Overseas buyers, briefly, if you're bringing people to Australia to look at your product, I'm just going to skip over that. Free samples. If you're giving away something for free, many of our fashion clients obviously do this. The cost of those free goods would be included. Number 6, a very good category, going overseas for trade fairs, exposition, seminars. The cost of that, if you've got a booth, the cost of that would be included. So you're going to a tech trade fair overseas. Those booths are expensive. The cost of that booth would be included. A promo, lit and advertising. This is probably the biggest one in your industry. Online marketing spend, digital media, Google, Facebook, Instagram, whatever else you're doing, gets included in that. Intellectual property, the final piece, I don't think it's so prevalent, but if you're registering intellectual property, it might be claimable under this plan. Okay, again, indicative expenses, overseas travel, online advertising, SEO consultant, PR marketing, patents, overseas offices, trade shows, conferences, and attending trade shows and conferences. Go. Okay. Not sure quite what happened there. Let's go forward rather than backwards, as we always need to do. Okay, those two there are the main government grants in Australia. I'm going to go over one or two other grants that I think are relevant to tech companies. I don't know why it went backwards. So let's just, again, go forwards. Yeah, there we go. Business growth. I'm going to skip it. Not so relevant to you. And then it skipped another one. Give me a second. Either I can find it on the slide or I'm going to... Okay, this one here, accelerating commercialization. It is a one-for-one matching, meaning you don't have to spend the money to get it back. The others that I spoke about, you've got to spend the money to get it back. Here, it's when you're raising capital, they match you one-for-one. So, and it's up to $1 million that match you. It's a very big grant. People find it very attractive. It is hard work, but you need to be what they call in the valley of death stage, meaning you've not done sales. You might have done an initial test sale, where you've done it cheaply, you're getting a first client, that kind of thing. They call it the valley of death because you're not making money yet, and a lot of startups fall over in that point. But there is $1 million there, or for whatever, 350, if you're raising 350, whatever it is that you're raising, it's there for that. It generally works well if you're raising that you kind of make your documents together for this grant as with your raising, because this takes a lot of time. We don't do this grant ourselves. I know someone that does. It is a difficult grant to get, but it is a lot of money. In New South Wales, there are two attractive grants. The first is $25,000 for an MVP, minimum viable product. It's called Jobs New South Wales MVP. So basically, it's a one-for-one matching again. And if you're at an early stage startup and you're one of the industries that they find attractive, education, health, transport, logistics, there's others too, you could apply for that $25,000. You need to be doing a project. Project needs to be worth, to get the 25, it needs to be worth 50 grand. It can be worth more, but then you putting in more than their 25, and they could fund you the $25,000. This grant, I always recommend for people to apply for it on their own. Don't use somebody, rather get all the money yourself. Just go online, search Jobs New South Wales MVP, and you'll see this grant come up. Now, there is the big brother to this grant called Building Partnerships, Jobs New South Wales Building Partnerships. You can get up to $100,000, 35% matching. There's got to be a collaboration. So essentially, it's three parties: yourselves, somebody that could be a future client. They don't have to agree to be a future client, but they could be a future client, and now helping you test your product. If they've taken on to be a client, fantastic. They don't have to. And then another third party. It can be many types of third parties. It can be an external developer. It can be an investor. Case by case, we have to see. But you've got to include a third party that is in this collaboration, that is involved in it. That is $100,000. Now, in truth, in my opinion, when it comes to tech startups, the grants we've spoken about here today, we've spoken about 5. We've spoken about the R&D tax incentive. That is the number one. Currently, the government put $2 billion towards that. It was $4 billion. Unfortunately, they cut it. Hopefully, they pick it up again. The next one, the Export Market Development Grant. I think it's $150 million that goes towards that one. Fantastic grant for people that are exporting. Software is fine there. We spoke about accelerating commercialization. Here we are. And we spoke about MVP and building partnerships. Accelerating commercialization was $1 million, matching. MVP $25,000, and building partnerships $100,000. Wishing you guys all the best. Keep on hustling, keep on rolling in this time. Come out the other end, you'll be stronger for it, and I look forward to one day meeting you in person. Lovely to meet you. I think now, obviously, we have to say goodbye properly. Goodbye, everyone. Have a super day. Thank you again, Haymarket HQ, for putting this together. You guys are mad.